Picture this, okay. You're on Wall Street, May 6th, 2010, and bam, almost $1 trillion vanishes.
Just like that.
Yeah, poof, in minutes. The U.S. stock market just tanks. Chaos, right. That's the flash crash.
The 2010 flash crash.
Yep.
Infamous, for sure.
Right. And we're going deep on this one. Navinder Singh Sarao. Ever heard of him? The Hound of Hounslow.
Rings a bell. Wasn't he the guy behind it all?
That's him. And the crazy part is this wasn't some Wall Street hotshot.
Yeah.
Nope. This guy was working from his parents' house in London.
Seriously, making millions, manipulating the market from, what, his childhood bedroom? That's wild.
No kidding, not your typical power player. And, get this, he built his own software to do it. Talk about tech skills.
It really makes you wonder how did he even learn to do all that? What does a story like that tell us about, I don't know, the cracks in the system?
Exactly. And hold on, we got to talk about spoofing. What even is that?
Spoofing, right. Okay, so it's like, imagine you create a fake out in the market. A mirage.
A mirage.
Yeah. Like, picture this. A concert, everyone wants to go, you got tickets, but you wave a big SLEDOUT sign.
Sneaky.
Totally. People freak out, demand skyrockets, you sell your tickets for way more. Basic supply and demand. That's spoofing. Sarao did that. Digitally, he put in these massive orders, but never intended to actually buy or sell. Just created the illusion of, like, tons of interest in a stock.
So he was, what, messing with the algorithms?
The algorithms, the traders, everyone. He knew how they'd react, drive the price up, then, bam, cancel his orders. Pockets the difference.
Like a puppet master. A digital puppet master.
Yeah, right. Pulling the strings from his computer. He understood the psychology of the market, and he took advantage of it.
Okay, but how did one guy with a computer cause $1 trillion crash? Was it all him?
Well, May 6th, 2010. That day, the market was already on edge. Imagine a dry forest just waiting for a spark.
Uh-oh.
Yeah, Sarao was that spark. All that spoofing, the huge orders, the cancellations, it amplified everything, set off a chain reaction, a selling frenzy.
So he wasn't the only cause, but he was the tipping point.
Exactly. It was a perfect storm. High-frequency trading algorithms reacting to his spoofing. They're designed to be super fast, right? Good for liquidity, but in this case, their speed made the drop even faster.
Wow. So much for technology making things better.
The double-edged sword, right? Potential for good and bad. And this was definitely the bad side.
It's mind-blowing that someone working from their bedroom could have that much impact on the world's finances.
It really shows you how interconnected everything is, right?
Totally. And it makes you wonder, how did he get away with it for so long? Did no one notice?
Well, before the flash crash, regulators weren't really focused on spoofing.
They had no idea it could be this dangerous.
Right. No one really saw it coming. But then everything changed.
So how did they finally catch him? I mean, he was in London, right?
It was his success that did him in, ironically. He made so much money, millions, that it raised flags.
Oh, so they got suspicious.
Definitely. They started looking into weird trading patterns, and all those trails led back to him. 2015, they finally got him. The Hound of Hounslow was caught.
Busted. What kind of charges was he facing? I bet those are serious.
Oh, yeah, big time. Fraud, market manipulation, the whole 9 yards. It was a huge deal. Here was this seemingly average guy, not some Wall Street insider, and he'd figured out how to play the system.
It sounds like a movie plot.
Right. But this was real, and it showed everyone just how dangerous spoofing could be, how vulnerable the market was, especially with all this high-frequency trading going on.
Of a real wake-up call. So what happened next? What happened to him? Did he go to jail?
This is where things get interesting. Sarao's story takes a turn. See, instead of ending up in prison for a long time, which everyone thought would happen, he actually made a deal.
He did. A deal after all that. That's surprising. What kind of deal?
He agreed to work with the investigators, tell them everything, like all his tricks, how he did it, the whole market manipulation thing, spoofing especially.
So, he became an informant, spilled the beans on his whole operation.
Exactly. He became, their key witness, helped them figure out how he'd exploited the system, what the weak spots were.
Huh. That's a twist. Did that affect his sentence? I mean, he didn't get away scot-free, did he?
Oh, it definitely played a role. The judge ended up being pretty lenient. Instead of years in prison, he got house arrest. For a year.
A year, that's it. For almost causing the whole U.S. stock market to crash. I bet some people weren't too happy about that.
Yeah, it's definitely a bit controversial. Some people think, hey, he helped them a lot, right? Led to big changes in the regulations. Others are like, no way, what he did was huge. He should have gotten way more than that.
Makes you think, doesn't it? What's the right punishment? When does cooperation outweigh the crime?
Yeah, tough question. But let's zoom out for a second. Sarao's case, it wasn't just about him. right? It had a much bigger impact.
Right, the whole system was exposed.
Exactly. He might have been one guy working from his bedroom, but what he did exposed all these vulnerabilities in the financial world.
So, like, everyone had to wake up and pay attention.
Yep. Regulators had to take a serious look at all this high-frequency trading stuff, figure out how to prevent another spoofing situation.
So he kind of accidentally triggered a whole wave of change. Ironic, huh?
Totally. A total wake-up call. Regulators all over the world started making stricter rules, more surveillance. They even started using fancy algorithms to try and catch spoofers.
So it's like a constant race, right? Trying to stay ahead of the bad guys.
Always. And as technology gets more advanced, the ways to manipulate the market change too. Remember, Sarao was just using his own software, it wasn't some supercomputer. It shows that even simple tech can be dangerous if you know what you're doing.
So what changed specifically because of all this? What did they do differently?
Well, for one, spoofing became a much bigger deal. Like in the U.S., they had this law, the Dodd-Frank Act. They added stuff to it specifically about spoofing, made it illegal, gave regulators more power to go after people who do it.
So they basically had to update the rules for the digital age.
Yeah. Realized they needed to be tougher. They also started putting a lot more money into surveillance, developing algorithms that could spot spooting patterns, right as it was happening.
Sounds complicated.
Oh, it is. It's like a high-tech game of cat and mouse.
But we were saying earlier how technology can be the weapon, too. How did they deal with that part?
Good point. High-frequency trading, yeah, it can be helpful, but it also opens up more ways to manipulate things. So they came up with circuit breakers.
Circuit breakers?
Yeah. Think of it like a pause button. If prices start going crazy, up or down, trading just stops for a bit. Prevents those huge sell-offs that can make a crash way worse.
Like a safety net.
Exactly. It's all about trying to keep things under control. So, yeah, tougher rules, better surveillance, circuit breakers. It's a multi-pronged attack.
Makes sense. It sounds like Sarao's case had a huge impact on the whole financial world. How we think about market security, technology, everything.
Definitely. But is this all just ancient history now? Or are there lessons we can still learn from the Hound of Hounslow? I think there are. It's kind of scary, right?
One guy.
From his house. Messes up the whole market.
It makes you wonder what else is out there. What other, vulnerabilities? If he could cause $1 trillion crash, what else could happen?
Right. I mean, the more complex things get, the more interconnected everything is.
Yeah.
It's like we're in uncharted territory. We've gotten better at the regulations and stuff, but you never know.
So what does this all mean for, the regular person, someone who's just trying to, invest their money? Are we just stuck dealing with whatever happens with these algorithms and rogue traders?
Not necessarily. The more you know, the better, right? So Sarao's story just shows how important it is to stay informed, to really understand how the market works.
So, read the fine print, ask questions, don't just trust the system blindly.
Exactly. And remember, technology can be good or bad. It all depends on who's using it, right? With all this new stuff popping up, like cryptocurrency, it's even more important to be careful. Make sure there are safeguards in place.
Sounds like it's a constant battle, keeping the system safe.
Kind of, yeah. And everyone needs to be involved. Regulators, experts, even just regular people. We have to keep talking to each other, figuring out what the risks are, and making sure technology is being used for good.
So what's the big takeaway for our listeners today? What should they be thinking about after all this talk about spoofing and the flash crash?
I think the most important thing is don't get too comfortable. The financial world is always changing. Stay informed, ask questions, be aware of the risks. That's the best way to protect yourself.
Good advice. The Hound of Hounslow, that whole story, it's pretty wild. It shows that even with all these fancy systems, one person can still make a huge difference.
And that story is still shaping things today. How we approach security, regulations, all of it. It's a story that'll keep us thinking for a long time.
Well, that's all the time we have for today's deep dive. Thanks for listening. We hope you learned something and maybe had a little fun along the way. Remember, knowledge is power. The more we understand about finance, the better we can navigate it. Until next time, stay curious, stay informed, and we'll see you then.